Despite a strong performance in 2023, risky assets came under pressure during the third quarter of the year. Emerging and developed markets were down roughly 3% during the quarter in dollar terms. Global bonds were also down, with the global aggregate bond index retreating by 3.6%, and commodities were up 4.7% on the back of a strong performance from the energy cluster. In line with global markets, the JSE Cap Swiss was down 3.8% in rand terms, and despite the fact that financials were quite strong, up 1.7%, the industrial index and resources were down. The Northstar equity fund had a very good quarter despite being negative, handsomely outperformed the peer average and its benchmark, the JSE Cap Swiss. The fund benefited from being overweight financials and consumer staples, which did really well during the quarter. And even though we were underweight resources, the lack of energy stocks detracted from performance. From a stock perspective, a number of financials stood out, including Absa, Sanlam, Outsurance. And against it, the detractor was the energy clusters in the form of Glencore, Exxaro and Sibanye. From a positioning perspective, we made a few changes to the portfolio. We rotated some of our financial exposure, which had done very well, into gold stocks and diversified miners, which had been under pressure for the last 6 months. And we added to our healthcare exposure, which looked unduly discounted at this point. The fund remains broadly defensively positioned despite the fact that we added cyclicality to it, and our buy list is looking very attractively priced, and we're starting to see a number of opportunities emerge that look attractive to us.